The Hedgeless Horseman here. It's February the 12th, 2024. The title of today's video will be The Big Long Part 2. First of all, thanks to the sponsors. Second of all, let's check in with markets. Not much happening. Silver up 1.45, while gold is not doing much. Anyway, so I've been looking at some charts recently just to get a better idea of, let's say, how contrarian it is to be long gold juniors or gold stocks right now. First of all, I mean, you've probably seen this, and I think I talked about this in the last video, that, there's a lot of people who used to be, let's say, gold bugs. Like when I started out 2015-16, most larger accounts on Twitter were about gold, mostly invested in gold stocks, gold juniors, but that has shifted a lot since gold miners have kept underperforming, and especially going into today. A lot of accounts are more into, at least recently were into lithium. Some have switched to Bitcoin, as you probably know as well. Copper has become a very big theme. Also somewhat, but decreasingly so recently, nickel. Rare earths have been popping up. So it kind of goes to show, I think, that, like always, people are attracted to the things and themes that have been working or has been working. That is very human, of course. And it's like I own copper juniors as well. I own nickel juniors, quite a bit of nickel juniors. I own like one lithium junior. But the point is that what has worked is typically what people trend to. And that's why I also mentioned, I think it was the last video, that, okay, what's been working really over the last 3 years if you're in the gold junior space? That's only been alpha. Growth stories, and very few of them have actually been able to go higher over the last 3 years. And that also obviously makes it so that recency bias is favoring alpha plays. And I've said recently, and I said the same thing down here, and I did the same thing down here. Beta is the thing that's actually going up most in risk reward. When everything goes down, when we're already at the extremes, beta is actually going up. It's becoming cheaper, better risk reward than alphas. That doesn't mean that alphas are not getting cheaper, because if they're getting cheaper, the risk reward is getting better by default. But it's just from a compounding perspective, it's actually beta that has been, again, going up the most in risk reward. And that obviously rhymes with the fact that, okay, since beta has been horrible since 2020, well, especially since 2011, if the companies were still around, the longer something underperforms, the fewer will see any reason to buy it. That goes for the sector overall, that goes for silver, that goes for, again, intra-sector types of play. Again, alpha is the only one. I mean, it's the Snowlines, it's the Hercules Silver, etc. Few of those cases have actually worked out. And those were all alpha, meaning exploration risk or exploration surprises. Whereas your Bear Creek Minings of the world, they have been absolutely slaughtered. They're down like 90%. And that means more, the longer that persists, more and more people will be attracted to alpha rather than beta, because, again, recent history shows that beta has been worse. But therein lies the, key, again, how opportunities work. Everything is cyclical, and banked success that gets extremely cheap becomes a very low risk play. It becomes even more so a when not if question if you're going to make money, whereas if plays, alpha plays are always what if. So yeah, that's the simple version of it. As I started out saying, I've looked at a few charts. I think I posted this in the last video. I mean, this is pretty incredible. If we look closer, this is the Huey, or actually it's the gold over Huey ratio, gold over gold miners, a gold mining index. As we can see, we're up here. This is the weekly, I think. So last close was up here last week. Okay. Which period since 1996? And there's a bunch of different reasons. Don't get me wrong. It's like inflation, miners having bought a bunch of, let's say, or made a bunch of bad acquisitions here, and cost overrun and yada yada. So there's a bunch of reasons, obviously, that explains parts of all these moves. Why gold miners underperform. But still, the same thing applies there. The longer something has persisted, the more convinced people are that it's going to persist, for a long time yet. That's how it is. Everyone was extremely, the extreme consensus, or by far the big consensus here, is that gold miners will suck forever. That's the funny part. It's like everybody is convinced at the worst possible time. Actually, when everybody was convinced that gold miners were absolutely worthless to own relative to gold, is when the gold miners then had the best quarterly rally in history. That's the thing. Current consensus shows up in current valuations. Right? I mean, that makes sense because everyone's betting today, selling or buying based on what they think about the future, okay? Or especially the short-term future. So what we can see is that, okay, this ratio has been higher 2 times before since 1996. Okay, what were those times? 4 months during the 2015-16 bottom. This ratio was higher then. Then the Huey from the bottom here went up like 130%, 132% or something. Juniors went up 500%, up to 1,000%. The second time was here, and that only lasted for 1 week. The ratio was only higher than where it is now for 1 week. That was during the COVID flash crash. 1 week. If anybody bought within that 1 week, Huey would go up 130% or so. Many juniors went up 400% from the bottom here. Not all, of course. Some even went up higher, some went up less, yada yada. But that is the only, let's say, the saying is if history doesn't repeat, but it rhymes. So, and as always, this does not say, none of these ratios say exactly when or anything like that. This ratio could still go higher. Miners could still go down. But what you can obviously tell is we're at an extreme. A mean reversion from here is not up. It's not gold miners underperforming even worse to gold. Because that's only happened really, 2 times before. No, it says that the next big move, or it suggests that the next big move over the, let's say, medium term is up for miners. And again, the only 2 other times were some of the best buys you could possibly have, even though, yes, the rallies were actually not starts of new bull markets. It just were extreme bull legs. I mean, this and this are the quickest returns. I mean, most violent bull legs you've seen since probably here to here, here to here. This was pretty violent, and the bottom here. And I know how it is. Everybody, again, consensus right now is that this is not going to go higher. The consensus, given where we are, the by far consensus is that gold miners will not go up anytime soon. So if you think like that, which almost everyone does, you're in the consensus. You are with the vast majority. You are with the herd. The herd right now, 99% of people are convinced and betting accordingly that gold miners will not move up within the next year or two. So if you call yourself a contrarian and you're, let's say, bearish on gold miners here, you are not actually a contrarian. Or at least if you're not positioned as it, you are definitely not a contrarian. That's a fact. Because this is as one-sided consensus as pretty much we've seen since 2015 and the COVID bottom. That's you can't argue with that. That's a fact. People have almost never been more bearish, and this is, Ross Beatty, I put this up on the website talking about the dislocation here.
You started to talk about the disconnect that we see between the gold price and the gold stocks. And I think probably a lot of people here would like to hear more about that and when that may start to move a little bit more as we would like.
Oh, sure. This is for this audience, I'd say if there's one single thing I can talk about that is, I hope, going to make you money in 2024, it's what's going on today with this disconnect, this crazy, unprecedented in my career disconnect between the gold price and gold equities. So gold prices have gone up and up and up. Gold price has gone up $200 in the last just few months. $200. The gold equities have traded down across the board. The gold seniors, the gold intermediates, the gold juniors, they've all traded down. So typically gold trades in tandem with the gold equities. Sometimes a little, so there's just minor little disconnects here and there. But in 2022, late 2022, and all through 2023, we have had this increasing, illogical, bizarre disconnect between higher gold prices and lower gold equities. So the obvious question is, from today on, what's going to happen? When you look at a 40-year, and I've been in the public company game now for about 38 years, 39 years almost. And, I've seen a lot of cycles, a lot of changes in cycles. And typically, they trade in tandem. So I'm going to say in 2023, we had a situation which was unique in my entire career. Unique in my entire career, where we've had this there's just no buyers for gold equities, just no buyers at all. It's a strike. Is that going to change? It will change. I'm going to go on 1 year of strangeness versus sort of 38 years of an ordinary pattern. And I'm going to suggest that we're going to go back to that ordinary pattern. Either the gold price is going to crater, or the gold equities are going to bounce back to get back to that correlation that they've had for so many years, so many decades. And this means today, since I'm bullish on gold, I don't think gold's going to crater. There's actually going to be a very happy and a very significant move in gold equities across the board in 2024. Again, I don't know when, I don't know by how much, but I'll suggest that it'll happen before any of us know it's happened. There will be a great temptation to sell positions you've got right now that you might have made 5 or 10 or 20% on. Maybe sell a bit, but resist the trend, resist the tendency to sell, to take a short profit, a small profit, because when this reequilibration happens, it's going to be immediate, it's going to be huge, you're going to get a double or a triple, and that's when you make the real money. You buy today. I'm not really an investor per se, I'm a developer, I develop companies, but I'm starting to buy right now. And I haven't done this in 5 years as an investor. I'm starting to buy because I just cannot sit back and believe in my heart that these equities are going to bounce without wanting to capitalize on it. I sort of harken back to, say, 2001, when I was sitting there running Pan American Silver. Silver prices were all-time low. Copper prices an all-time low. It was just a horrible time to be in the business. Every company in the world was losing money. The equity prices were on the floor. I wasn't an investor, but I went and bought a whole bunch of copper deposits because I could see the copper price was trading at an all-time low and was likely to bounce. And that was a very happy trade for me. It made a lot of money for me and all the people that have invested with me in that business. Right now, I'm not running a fund. I'm running one big gold mining company that's trading really, really cheaply. I expect it's going to have a wonderful run this year, Equinox Gold. And I've got an interest in one or two juniors. The main one for me is Lumina Gold, which, today.
So, to wrap up, I mean, rewind and listen to this as many times as you need. But what he's saying, again, is that nobody's buying. Nobody is bullish. If people were bullish, they would be buying. And there's no retail buying. And it's the retail that are setting the prices of these gold juniors. Basically, to sum up the current gold junior sentiment, the very few who seem to be bullish are billionaires and buy low. Bearish, everyone else. So the billionaires, I'm talking Ustra, McEwen, Rick Rule, Ross Beatty, they have been in these sectors for like 40 years. They are rich from being smart investors. He can't help himself. I mean, Ross Beatty says, well, this is the first time in 5 years he is this bullish. And he, makes a comparison to early 2000s and how he, picked up copper juniors when they were trading for nothing. Big beta plays because they had deposits that were at face value worthless because copper price was too low. That's not even the case today with gold. Gold is at 2040. The gold business is not worthless. Despite this, and that's why this is so much more extreme and why I have no idea how anyone can even hope to make any real money in this sector if they can't be bullish, especially gold juniors right now. Because this, like he says, this is the greatest dislocation he has seen, and that goes for juniors especially, and that's why he's actually picking up them even though he's kind of semi-retired and runs a big gold mining company. So it's probably peanuts for him, but he can't help himself. I mean, he can't sit and watch and see the biggest opportunity, in his opinion, even since early 2000s, and not take advantage of it. So it's like, in my opinion, and I've been debating this with a few people. If you're not bullish now, you are not a contrarian. That's a fact. If you're not bullish now, you are by far with the herd. The herd has never been more one-sidedly positioned in gold juniors than today, really. Well, I guess for a brief period for 4 months in 2015, and for a week here, and I mean there's some other nice bottoms, especially. I mean we're even higher here, and you can see these peaks. For example, this was a major low here. This was not a major low. It was, where was that? Here perhaps. But anyway, anytime we get even close to these levels, the very, very few who went long got rewarded within the not too distant future. And that, if you hear Rick Rule, he says he believes 2024, this year, will be very good for juniors. Ross Beatty just said he believes his best, let's say, advice or his best bet is basically gold juniors, and he thinks it's going to be this year. Also, and again, these are people that have made billions from investing in this space. And also what he says, and a bunch of other people have said, like Frank Usher and McEwen, that when this sector gets going, when it turns from these extremes, it can go really, really quickly. And lo and behold, last 2 times we were even more extreme than this. Best quarterly rally in history of miners, I think it was. My portfolio went up 500% in 8 months. From here, I think my portfolio went up 400% from the bottom here in, 3 months, 4 months. And that's why he also added that, and he's expanded on this before, people who sell after 5, 10, 20% when we're at these extremes. That is not taking advantage of the situation. Extremes like this provide big moves sooner or later. 10 or 20% is not a big move. A junior can do that in a day, in a week. That is not a big move. A big move is hundreds of percent. Oh, and this was actually even more fun. So I since Nvidia has done so well, and we know that Bitcoin has been doing quite okay recently, and that's mostly, and I looked at correlations, etc. I mean, Bitcoin is much more correlated to Nasdaq than it is to gold, which is funny because it's supposed to be the same. But like someone mentioned at the VRIC, that it's basically a leverage play on Nasdaq, Bitcoin, which is again crazy. So it's like I wouldn't compare gold and Bitcoin at all. It doesn't behave like it. It's not the same reasons people buy it, yada yada yada. So okay, Nasdaq, which is obviously has been on a tear, mostly thanks to Nvidia becoming higher value than if it's correct, I read that Nvidia alone has become a higher value than the entire Chinese stock market. Imagine how crazy that is. That sounds like Japan in what was it 1980 or 2000s, where it's like the real estate bubble there, that the Imperial Palace of Japan was valued higher than all the real estate in California. That's how big some bubbles can be. And what happened after? Well, Nikkei went down for 30 years or something. It's only now sniffing out the same highs it set in 1980 or something. I mean, it's just absolutely incredible how one-sided trades can be in markets. And if you have a huge run, bull run, bubble, the aftermath of that can be decades long bear markets. And the same goes for the other way around. Like in going up to, for example, 2000 in gold and gold miners, I mean, that went down since 1980, basically a 20-year bear market. Then we got 11-year bull market. So typically the bigger the bear, the bigger the bull. The bigger the bull, the bigger the bear. And if you ask William Middlecoop and Rick Rule, for example, I mean, they suggest, and you can see that on the Huey, for example, that actually we've been a bear since like 2011. So we're in a 13-year-old long bear. You can imagine what kind of bull can be produced from that. And as I showed the Gary Savage tweets yesterday, he expects this will be possibly the biggest bull in history coming up. That's not something you want to sell 20%, after you get the first 20% of. That's something you might be able to hold for 5 to 10 years and on average make money every single year. And it's the first move that typically are the craziest. I guess the first and the last moves, the first going from extreme where there's no liquidity, there's no asks, there's so few buyers and sellers that when the buyers come in, they just plow through the few people that are left to sell. So there you can have these pops of hundreds of percent in just a couple months. Then it starts to get a bit more sedated and consolidation, and then of course it's sometimes during the ending moves where stuff goes vertical, like we're seeing with Nvidia right now, for example. Anyway, so I looked at the Nasdaq, which is the hottest thing now, divided by the Huey. And this, I think, is even more incredible than this. We're now at a ratio that only has been higher at one point in time since 1996. You can see it. Okay, we're up here now. Okay, when did we get even more crazy? You know, when were people even more overweight Nasdaq relative to gold miners? Lo and behold, that was in 2000, late 2000, for 3 weeks, which I have marked here. This is the only time since 1996 that Nasdaq had a higher, the ratio Nasdaq divided by Huey was higher than today. And that was not by much, and it lasted for 3 weeks. So what happened after that? Well, this was literally the lowest point in this entire chart, and was the start. And nobody, of course, knew it at the time because everybody was super bearish here. It's probably just Ross Beatty that was buying here. It preceded an 11-year-long bull. History doesn't repeat, but if it gets anywhere close to rhyming, this is just absurd. And of course, there is no, again, I'm going to say it 1,000 times, I've said it 1,000 times before, this does not mean that, if miners don't turn up tomorrow or today, that means, then it was worthless. No, this can go higher. Miners can go lower. But this is suggesting what's going to happen sooner or later, and where the big move is going to go, what direction the big move is going to go. This is just, this is absolutely crazy. It's like, imagine to be being aware, and actually being the most extreme of contrarians and buying gold miners and juniors here. This might be an opportunity we'll never see in our entire lifetimes, because it's only been seen once, and that was 24 years ago. It is absolutely crazy how lucky we are, even though I know that's the thing, everybody hates this sector, but it's like, whoa. It's like this. Just if you're still here, if you're still in this sector, if you had to suffer a 3-year bear because you were, quote, early, that is nothing. If you're down 50%, if history rhymes, minus 50% is absolutely nothing. The worst thing, of course, would be that you bought high, sat for 3 years, then sold when the best opportunity that were going to pay for all your mistakes probably showed up, and you didn't realize it. So you left. You took a minus 50% in cut in your portfolio and left. Wasted this opportunity that might take 24 years to show up again. If the cost is you had to suffer through a 3-year bear to at least be still aware, engaged, and doing due diligence on some gold juniors, that is more than worth it. A 3-year bear is nothing if history rhymes. This is the most, that is, and I'm going to get to it, there's like, it's not only gold juniors and gold miners that are actually, very contrarian buys right now. But basically, if you're a gold bull, and I've seen this in some juniors, some days I am literally the only person in the entire world that is buying increasing my ownership in some of these gold juniors. It does not get more contrarian than that. That is why how I earn my returns. When 99.9% think this is not a good time to buy gold juniors, and I'm the only person in the entire world at any given time buying gold juniors, what do you think I deserve in the long run if I'm the most contrarian in the entire world? That's something to think about. So I had a discussion with a follower here. So I put this up. I mean, the implications, in my opinion, are pretty obvious. There's like we're in for, when the mean reversion gets going, this is going to be, like Gary Savage and some people think that, maybe the biggest bull in history, at least in our lifetimes probably. And then someone, of course, again, this is not a billionaire. This is a human being. Let's say the average investor who basically kind of shot back. Of course, this is like, I didn't even say anything. I didn't say buy. I didn't say whatever. I mean, it should be obvious that's, what I'm inferring, that, hey, if you want to be a contrarian, this is the most extreme time since 2000, according to this one. So I didn't say anything. I didn't say any conclusion or anything like that. But if you are bearish gold juniors now, and you think you are right in being bearish, typically people try to insert their view on other people. That's why it's like, I don't. If somebody puts out a bearish chart or whatever, I typically don't have to force my opinion on them, because I don't really care. I don't need them to validate my thoughts, because I'm bullish. I know what my returns are. I know that my strategy is sound. Okay, so we have mountain people here. One of the most efficient wealth destructions in financial markets. Betting on a new era in gold mining here within 6 months is very bold, to say the least. First of all, I obviously didn't say anything about a new era and 6 months. So he's basically putting words in my mouth. That what I mean is that, and that's obviously where he gets the anxiety, because the way, I mean, he says how he interprets this, that he's afraid, since he's bearish, he's afraid that this chart suggests or will mean that there's gonna be a new era coming within 6 months. So he basically airs what he's afraid of. And he portrays that as being my comment, that I put that out there. So he's basically painting his ghost, right? That makes sense, I hope. And then shows this chart of, what is that? Huey, divided by gold. Meaning that gold miners have underperformed the metal. This is underperformance. So he's afraid that this is going to change anytime soon, and then he uses this historic chart, backward-looking chart, to validate him being bearish. And of course, the thing is, and this is very human. It's like, I don't think he's trying to be an asshole or anything like that. But it's very human nature, and that's why, it's so hard to in reality be a contrarian and actually follow simple, straightforward, common sense investing principles. Because you can take what he said, he showed what has happened, and what he is saying is like, he's not betting on this turning anytime soon. That this, since the trend is so long and obvious, that it's going to continue for the foreseeable future. And that's what I mean by consensus gets more and more extreme, that it's pricing in even more, a lower chance of this changing the longer it has taken. But if you flip that, you can go back and look at the Huey in 2000, from 2000 to 2011, and take word for word and just switch the word destruction to creation, right? Because if let's say, with the same logic, if we were here, he could have posted this chart to anybody that was bearish gold miners and say, this one of the most efficient wealth creation in financial markets. Betting on a new era in gold mining here within 6 months is very bold, to say the least. Why? Because the trend, again, hindsight investing, has shown that this has worked for so long that, as is usual, as is typical, people believe the chances of it continuing is increasing, not decreasing. At the tops, everybody's convinced this is not going to end for a long time yet. If we go back here and had like a 20-year-old bear, people think that a lot of people were really bullish here. No, they weren't. Some started to get bullish here. Here people got more bullish. Here a lot of people were bullish, thinking this is going to continue like that. Okay, slammed. Up here again, the longer it has taken, the longer the move, the more obvious the move, the more people are convinced it's going to continue. That's why people buy so high, because they don't care again about valuations, because valuations, miners were not cheap up here, okay? It's just that everybody was convinced, regardless of what the valuation is, because most people are betting on, what's the weather going to be tomorrow, same as yesterday. So here people were a lot more bullish than here or any other time before. 99% of people were bullish here. 99% of people were bearish here. Right? That makes sense? So again, it's like shorting over a couple of decades would have been a great wealth builder, actually. And that's how most people view opportunity cost. They look at what happened and say, oh, there was opportunity cost. And they say that about Nvidia now. That is not how opportunity cost works. And I'm not going to go through this again. So I just ask, first of all, probably is it damn hard to invest backwards in time. If we are up here and people say, well, there's been opportunity cost to get into miners, and obviously the longer this trend has persisted, the bigger the opportunity cost, quote, looks. So what is your conclusion? Since the opportunity cost, if you can use it that way, which you shouldn't, but still, if we just look at past history as, quote, opportunity cost, obviously it's been its highest after the longest and the biggest move. What conclusion, how is that any useful for any investor? What does that mean? If the opportunity cost, quote, is highest here, does that mean we should be almost, more bullish than ever? No, it makes absolutely no sense, right? So nobody even knows what opportunity cost is really, or how to use it. They basically use it as, hindsight investing, and then kind of try to justify why I guess I should go long here because the opportunity cost has been so high. And of course you should be selling here because the opportunity cost has been so high. So it's like that's not how investing works. So what is your conclusion? Because sometimes people just say stuff. In my opinion, if it's not actionable, it's worthless information. People will just say it's like, oh, it could go lower. That's what people tend to throw at me anytime. It's like, oh, I think miners are cheap, and someone says they can go lower. It's been such an underperforming sector. So what does that mean? It can always go lower. That's the thing. When is the time it can never go lower? Huh? So that's the funny part, that people use it can always go higher as an excuse to buy as high as they like. And people use the opposite, it can always go lower, to justify them selling at whatever lows, because it could still go lower here. That's the thing. And that's what 99% were thinking about. That's why they didn't buy. That's why nobody's buying now, because it can always go lower. But up here, they buy because it can always go higher. So that is an absolute worthless reason at any point in time. You should never buy because something can always go higher, or sell because something can always go lower. And that's why most people end up, almost nobody ends up making any money in this sector, because nobody has an actual strategy. And I just asked him, what is your conclusion based on this? Like, how does this help you? Can you put it into words? My conclusion from this chart has to be reduced significantly on strength and be very patient on buys. Diversify into other areas. The chart shows there's more wrong than just current sentiment. I hold miners and will not sell unless there is a rally, but I am learning. Okay, he says I am learning, of course. And again, this is obviously not a master investor, so it's like, I would say he's, pretty chill about his rationale. He's not one of those, bashers that get the bashers. Well, people that get pissed off if someone doesn't agree with them and they insert themselves in a conversation. But basically, he's describing the opposite of what Ross Beatty has said. Ross Beatty is saying reduce significantly on strength. That's the opposite of what Beatty said. Well, it's not per se the opposite, because Ross Beatty said, well, you can sell some, etc. But not he had the opposite idea, not significantly. And be very patient on buys. They don't seem patient when it comes to buying. You've seen McEwen in a bunch of placements. You've seen Ustra more and more. Ross Beatty says this is the first time in 5 years he can't help himself to buy. That is not patient buys. This is such a big layup that he doesn't. We're such extremes already that it doesn't really matter if you pay up 10%, 20%, or it goes down 20% first. This is such a layup. The chart shows there's more wrong than just current sentiment. Actually, it doesn't. It shows what has happened and what the case has been, and the outperformance. But we know, yes, inflation caused miners having done poor acquisitions and all that. So again, we know what has happened, right? It doesn't say much about now except the current sentiment. I hold miners will not sell unless then I came back with, problem is that you look in the rear view window. So that is the thing. I don't know if he watches my videos or anything like that, but the funny part is, like, let's say, some people, let's say I get bashed. Almost no one actually does or sees it the way I do. There's a few people that do. Mark, shout out to you, who often comment on YouTube. If you can see, Mark is obviously bullish. He's patient, he's calm, he's not, cursing about this sector or anything like that. That's a guy that knows what investing is all about. He knows where he is, he knows what he's doing, so he doesn't get pissed off or emotional or just say this sucks and I'm gonna sell on the first 20-30% pop or something, or I'm walking away from this sector forever. No, you can always tell. You can tell how people write quite quickly if they have a shot in this market, if they have any idea about how investing works. And that's like less than 5% of people. Right. Also, just taking a look at NASDAQ divided by silver. This is the highest since 2000 as well. It's not up to this top yet, which the Hue in NASDAQ ratio is. But you can see it's like the top here, yep, low of this ratio, kind of obvious perhaps, still. So we're as extreme. It's only been and this is silver down here. So here you can at least see that even though the ratio topped here, it wasn't necessarily like, you know, the exact bottom tick. And that's what a lot of people miss. Everybody wants to buy there. But everyone thinks we're always here or here. Right? I mean, that makes sense because everybody, including now, says, well, it can always go lower. I don't see anything changing, yada yada. So think about that. When we're here, people will still be afraid that we're here. That's why they will never ever buy. And the longer this goes down, the less they will be inclined to buy, because they think the weather is going to be the same as yesterday. When do people actually buy? Start buying up here maybe, and then it's when it's already up 100%. That's typically how it is, because people look at trends, and the same goes for mountain people. You know, he said, well, it's lower lows and all of that. So again, he's using the current trend like an excuse for not being bullish now. The problem with that is that I explained to him, if you're waiting for the trend to, quote, show that we have now entered a bull market, first of all, you don't know if we actually have entered a bull market. And the question is then also, when has the trend changed? Let's take silver, for example. When do you know the trend has changed? Is it when it goes over here? But the problem is it actually went back and below that trend line, I think. I can't make any line. But let's say we have a line going like that, okay? So it went higher, everybody got bullish, like now is the time. What do you do if you pay here, you buy here, then it goes down, whoa, that's $8 down to 5.6. Let's say your silver goes down 30% and below the trend line that you just, used as justification for buying. What do you do here? Sell? Minus 35% in whatever, a week. The thing is, the people that were just averaging down, let's say they have an average here, they're already up like, I don't know, 60% up here, and they're already in the money at the pullback, while this guy who waited might get flushed out. So he's minus 35%, and then he sells perhaps, because now it looks like a fake breakout. Okay, so he's out. So again, when is the trend your friend? Is it when it goes past this previous peak here? Is it when it goes through this peak? Well, okay, you buy at 8 again. So you're minus 35, you buy at 8 again. Now this time you were lucky enough that it wasn't, a false breakaway. Because take this for example. You wait for the trend to be your friend. Let's say you draw a line here, it pops up. That wasn't even the start of the bull, not really. Well, kind of. I mean, this low is higher than here, of course. But my point is, it is so damn hard to know when actually the trend has changed, unless you buy like, I don't know. When is the trend really your friend? Obviously, that's up here. This is when the trend is really your, quote, friend. But obviously, this was way too late, and you would suffer the worst bear market in ages, right? But anybody who just bought when it was cheap, they would already be in the money here, still probably be in the money here, a lot in the money, yada yada yada. So my point, which I keep hammering on, the only thing I'm really good at is buying cheap and then waiting, and buying cheap more if it gets cheaper, and then waiting even more. If it goes even lower and cheaper, I buy even more. Now it looks like it's not been cheaper, especially gold juniors, since 2000. Yeah, 2000. So if you think I'm anything but bullish now, you haven't followed anything I've ever said in any video. Okay, so let's look at it. Again, everybody wants timing, that's what everybody cares about. This wasn't even, it went higher, but that was here. It actually went lower. Not a huge amount actually, it's like from 5 to, it bottomed out at 4, 20% dip. So it's like, theoretically, just play with the idea that the theoretical downside, which only lasts for a period of time, paper losses for a period of time, is 20% in silver. And you don't know exactly when, but the upside is from $5 to 10, 11, 16, 20, 30, 40, 48 in the next few to several years. What's the risk reward there? Limited downside, if it even happens, probably short-lived, and the upside might be monumental. Should you, let's say, sell one or let's go back to this one actually. No, wait. Again, if we're even around these levels, does it make sense to sell because you think miners might go here? Does that make sense? It's not even guaranteed will, just the idea, because again, everything can always go lower. This could have gone lower. That's why nobody bought. This could have gone lower. That's why a bunch of traders actually sold. This could have gone lower. That's why people didn't buy. That is not a valid reason. And does it even matter in the grand scheme of things? If we're here, 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 or here, does that really matter? If you bought here, were you an idiot here? Did you look, quote, wrong down here because you were down? Yes. How did you look here, or here, or here, or here, or here, or here, or whatever? That's the funny part about how most people work. They operate, or they seek perfection, despite the fact that most have not even been able to outperform an index if you give them 10 years. People literally believe the reason why they don't make money is because they don't buy here and only here, and sell here and only here. That is why people are trying to time these bottoms. Because nobody wants to buy if they think there's a risk it might go lower in the short term. No matter how big the opportunity is, no matter the fact that, if we get a mean reversion in the next couple of years, it's going to dwarf any downside from where we are. It doesn't matter. Everybody's looking to get in here, literally here and nowhere else. Right? And that's also the same token why people wait for the trend to be their friend. Because the worst fear everyone has is looking stupid and losing money on paper. I have no problem with that. I look stupid 80% of the time in this godforsaken sector. From here to here, I probably look stupid in 80% of cases, right? From here to here, I think I look stupid in 100% of cases. From here to here, also 80% of cases. The thing is, I look right in 100% of cases here, 100% of cases here. Actually, the last 3 years in juniors, despite these pops and whistles, etc., been looking, let's say, stupid on average since here. It doesn't matter. Because when this sector goes higher, it takes everything with it. When it goes lower, it takes almost everything with it. From this move here, I don't know how many, it's like if you're down 50%, if down here, it's like, when was that a problem? I think some juniors went up like 2,000, 3,000%. Minus 50% at a time like now is a drop in the bucket. But everybody's trying to bottom time. That's why nobody on earth is buying right now. Because everybody thinks there's a risk it can go lower and nobody wants to suffer through that. So again, I'm repeating myself here, but even when we're here, people are afraid that we're here. Right? And the longer it has gone on, the more convinced people will be here that we're actually here. That it's going to take another leg low. Because that's increasing amount of evidence, as evidenced by him having this as a reason for not to buy. Right? I mean, if he wouldn't put out this chart if we were here. That's not a lot of evidence. That's not a long trend. This is a long trend. So he uses actually the market against himself, if you know what I mean. So when he has the most amount of evidence of what has happened, he's most convinced that it's going to continue to happen. Whereas the longer, per definition, the longer a bear takes, the closer by definition we are to the next bull. So let's say this ratio gets even worse and the miners underperform even longer. What does that say? It says we're one day closer to the final turn. If miners are even cheaper, it means that one day closer to the final mean what was I going to say? Inevitable mean reversion, and from an even lower price means higher returns. So, as I say all the time, it goes exponential right now. The opportunities out there are going exponential. Absolutely exponential. This is, what is this? NASDAQ. Is this silver? No. Yeah, okay, this is the same chart. So I looked at some other ratios, like, again, just themes, like BHP. That's more of a, very diversified miner, got a bunch of copper and stuff like that, right? And this is Newmont, which is more, obviously, it's the largest gold miner, even though, yes, they mine copper and obviously have some silver as well. This ratio is also the highest in, yes, it's company specific, yada yada, but I still think it kind of shows that base metals, especially copper, I should say gold. It shows that gold mining is very, very hated, right? It's the lowest or the highest ratio here since. Only 2 times has it been actually higher here. BHP has only outperformed NEM even more than this 2 times. That was here and here. And this is the chart of Newmont. So you can see what happened afterwards. This looked right in short order, looked wrong after that. In the end, if you bought here, you would be up a lot within a year, right? If you bought here, you would be up within... almost immediately, actually. And you would have, this went from $16 to $84. Extreme buys, right? This is a decade worth or more of rewards. The average market average is 8 to 9% per year. So even more signs, just how hated gold miners are. And let's look at some other commodities, like oil market will face supply shortage by end of 2025, Occidental CEO says. I like oil, actually. The problem is, I don't really know how to value oil companies or natural gas companies. That's the only problem. Because I also see what the layup is in the gold juniors, and gold juniors I understand, so that makes it even harder. That even if I believe this, which I do, that I think oil will do well, also well. That's why I call this the big long, because like almost everything commodity-wise looks to be cheap, and this is also a very hated sector. And the oil companies are probably not pricing in this right now. Supply shortage. Let's say gold is at $120 or something in 2025. You would probably make, in some cheap gold or oil juniors now, or oil companies, you'll probably make a few 100% if that happens. If you like diversifying and know oil and gas, I have no problem with being long more than just gold, just for the sake of diversification. Here's an article: Germany to replace nuclear with natural gas plants for 16 billion. Okay, more, I guess, natural gas demand from Europe, at least Germany. Here is the natural gas chart. Do you think there might be an opportunity here in natural gas? How many times have natural gas traded below this price level? How long did it stay there? January to 6 months here, a few like, I don't know, half a month here, 2 months there. Otherwise we have to get back to 1994 for there to be even, like 1 year of prices being low here. This is what I'm talking about. People actually don't go long here. They don't see reasons to be bullish. I mean, I would say this is actually not even as extreme if we were to believe this ratio. This ratio here, for example, Nasdaq. I mean, it's not the exact same thing because this is a ratio and the other one is price. But this happens once. One time has this been higher since 2000. Here, actually, yes, natural gas prices have been this low and a bit lower in 2020, 2016, kind of 2001, yada yada. Still, this is an extreme, and I posted or I tweeted about natural gas when we hit this level. It actually went up quite a bit. I didn't buy any natural gas plays because I unfortunately don't know how to value natural gas plays. But still, it's like, do you need to be 100% in gold owners or gold miners? No, I mean, there's so much opportunity for a contrarian out there right now that it's crazy. What is the average price of natural gas? I mean, over the last, I don't know, 40 years, I don't know, maybe $4, maybe $3, I don't know, higher than this obviously. And when it goes, I mean, it spikes to, I mean, every single time, if we just look at that, okay, what has happened every single time after it's gone to this level? Well, here it ran from 455%. Here was a quick 133%. I mean, you can do this all day. It's like just this pop is 85 and then it went up 550. You have to go back to like, I don't know. I mean, you within a year or so, you were in the green, clearly in the green every single time since 1991 if you bought at this price level. And people, that's what I keep saying. It's like people say this investing in commodities is so hard. Yeah. How hard is it really? Do you need to be a rocket scientist to figure out that, hey, I think natural gas is probably a very good bet around here. It looks super asymmetrical because the downside is like, I don't know, a much less than, minus 30% versus up 300%. And let's say like in the gold junior space, where, as Ross Beatty said, the gold juniors have already priced in a gold crash. So imagine we're up here. No, that's not even a good. Imagine natural gas prices are down here and the natural gas juniors are pricing in this natural gas price. So what happens if natural gas actually falls down here? Well, that was priced in already. So in that case, you're getting fair value for something negative that has not even happened yet. And when it hits this level, what's going to happen afterwards? It's going to go up, obviously. So it's a no-lose situation, kinda. I mean, if you find natural gas plays that at least, will be around and not go bankrupt. So it's like, that's why I keep saying this sector is actually really, really easy in my opinion. The hard part is that you look wrong for a long period of time. Especially, again, in the gold juniors. Like, you look wrong 80% of the time. But it's actually very hard, in my opinion, to lose money over a long time frame if you can just buy cheap. Palladium prices, same thing here. This must be one of the biggest corrections obviously it's the biggest correction since at least 2009. I like palladium. We see and we can see these, how American platinum and palladium miners. Look at this volatility. Crashes 65%, goes up 685%, crashes 89%, goes up 1,473%. And still, as always, people will not buy here because they think we are here. They think it will always go lower. Even though, given what happens after every mean reversion and it passes the mean, it doesn't matter if you bought here, 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 whatever. The moves are so large, but it takes years, and that's why I tell people that if you've been in this sector for 3 years, which is typically the case now, for example, you bought in the high 2020, is that a fair assessment of how you are? I mean, you can pick from 2010 to 2013, you would be down. You would even be down even more 6 years in. But in the end, especially if you just kept on buying, you would make a ton of money within the next, let's say, 5 years. So 3 years is nothing. 3 years is absolutely nothing. 3 years is not enough to do anything really. Depending on where you are in the cycle, because there was no guarantee we were going to hit these levels. Now we know we're here. So what do we think the next 3 years are going to be? It's like, or take natural gas. Do you think natural gas has more risk to the upside or downside within the next 3 years? Judging by the fact that natural gas has never, traded below this for 3 years since 19. How long was this? 91? No, that's not even. That's 1.5 years. Okay, so at no point since this chart was formed, let's say, has natural gas ever stayed up to 3 years below this. So the thing is, it doesn't matter. The only thing that matters where we have been or recent history is where we are at now. Okay? If you started buying here, or whatever, start buying here, and you're here now, okay, that's 3 years of negative price action. The only thing that's obvious is that this is an even a better buy than here, okay? So yes, 3 years sucked. That doesn't matter because we're down here now. Now it's just a blatant buy. Now it's, an absolute no-brainer of a buy. But people take this experience and think that they suck, you can't make any money in it, might as well sell, I'm gonna sell at the first 30%, or when I get back to even or whatever. They completely miss the fact that if you bought, let's say, cheap, and it got cheaper, you're still gonna make money from this level. You're just gonna make more from this level. This is the gold Huey. I think this was like platinum divided by Huey, or a palladium miner, or an index or something. Maybe actually a platinum company. Well, this doesn't say too much, but I think that I think this could suggest that platinum palladium miners are actually even cheaper than gold miners. Or more hated at least, if that's even possible. Yeah, so I mean, I like I've said before, if you think I'm bullish, you should know how bullish I really am. But the thing is, nobody believes you. It's like, the boy who cried wolf. If, let's say, I've been bullish from here, well, I've been bullish since this period, but still, let's say I've been bullish, and again, I'm a stock picker, that's the thing. I'm not bullish on the entire sector at any point in time, except at extremes, when I started talking about beta plays being good, which typically I did around here. Here I don't remember, even because this was over so quickly and I was looking at the markets falling apart. But I did that here as well, and I think we're at the same point and I kept saying that beta is actually your better bet now, especially if you're, let's say, inexperienced. But fewer and fewer people believe you. If you were bullish here, down here people will say, well, you've been bullish you've been bullish for 1 or 2 years, whatever. So people actually believe it's getting less it's becoming less of a buy because it's actually gone down in price, while the opposite is obviously true. So by definition, I should be more bullish now than I was 1 year ago, much more bullish than 2 years ago, etc. But people don't see it that way. That's why you see decrease in buying the lower it goes. And that's why almost everyone actually ends up not making any money. Even it's like some basher on Twitter who commented to one of my videos like, "Oh, the market is cyclical." You ranted for 1 hour about how the sector is cyclical and all that, and it's like, oh, that's everybody knows that, whatever. And I had asked the same guy, how's your 10-year returns? Not impressive, he said. That's the funny part, because he's obviously in a bad mood right now. So he doesn't, he says he gets it, that it's cyclical, but he actually doesn't. Because if he understood cyclicality, he should not be down or whatever over 10 years, over a 10-year period. So he says it's nothing new, but he actually doesn't even understand it. That's the, irony of it all. As Pierre Lassonde says, this is the easiest sector in the world, the gold sector, because it always crashes and always rallies. Next rally might be a big one. Thanks for thanks for listening. Quote, not investing advice. I think it's beyond obvious what to do here. And again, main thing is that it doesn't matter where the next 30% move is going to go. It doesn't matter when the next big move is going to go. What we do know is what the direction the next big move is going to be. And when the big move happens, this sector goes up so much that it doesn't matter if it starts a week from now, a month from now, a year from now, 2 years from now. Knowing that, it's obvious how asymmetrical the risk reward is. And we are, in my opinion, way past the point of trying to be cute and try to get the bottom tick. If we're even somewhere close in this area here, or this area here, or this area here, it doesn't really matter. And furthermore, when it gets going, if you want to buy after the bull is confirmed, you're gonna have to paying up 100-200% probably. So if you make, let's say, 100% in juniors here to here, the people who just bought didn't try to time the bottom or wait for the trend, they're probably up 300%. So you're gonna underperform everyone that's not a bottom timer, just so you know. Thanks for listening. Have a great day. Bye.